and welcome to the special segment called as MC Pro Select Stock of the Day. I'm your host, Nikki Mirchandani, and in this segment, we bring to you fundamentally strong investment stock ideas. Today's pick is an auto ancillary company with a market capitalization of roughly 13,000 odd crore, Ramkrishna Forging. Let's get to know more about the company, which is one of the top auto component manufacturers in India, with a primary focus in producing forged and machined products for commercial vehicles. Now, let's understand what are the key triggers behind picking up this stock or the company. Let's start off with the Q3 performance. Now, the company achieved strong domestic tonnage of growth of 35.6% year on year, mainly due to increased content for vehicles, although export tonnage also saw in a slightly higher YOY growth of roughly 6.2%. The overall volume increase resulted in a significant 20% rise in the revenue profile of the company. Now, additionally, if you talk about the company's EBITDA margin, it's expanded by 87.9 basis points compared to the previous year. Let's talk about the demand scenario, which continues to be strong. The company is primarily concentrated on commercial vehicle segment, which also has been experiencing in a solid demand driven by government's emphasis on economic activities. The increasing need for last mile connectivity is also fueling in the demand for light commercial vehicles, while the reopening of schools and offices has led to the recovery in bus demand. Let's talk about the third component, which is improvement in export markets. With the easing of chip supply constraints, original equipment manufacturers, OEMs, are ramping up their production. Additionally, the company has strategically targeting markets in Europe, South America, where demand continues to be strong. Now, the management anticipates the export figures will maintain stability in the foreseeable future. Let's talk about the capacity expansion. There's also a fair bit of focus out there where the company has been in the process of expanding its capacity by adding in new facilities amounting to a total of 32,500 tons. These expansion plans include the establishment of cold forging line and 8,000 ton hot forging press lines in addition to several smaller press lines. Once completed, the initiatives will significantly enhance the company's overall capacity by an additional 65,000 tons. Now, growth through inorganic route, that's also one thing that is working in the favor of the company. The company has obtained an approval from the NCLT for acquisition of ACIL, a manufacturer specializing in high precision engineering automotive components. ACIL's main focus lies in producing crankshafts for tractors, commercial vehicles, and passenger vehicles, along with other components like connecting rods, steering knuckles, and hubs. With this strategic acquisition, the company will expand its presence into segment of tractors and passenger vehicles, further strengthening its position into the automotive industry. Let's talk about the valuation. Now, the stock has been trading at 28.7 times FY25 earnings, a relative expensive valuation, which can, at this point of time, MC Pro suggests that you can accumulate this on correction for long term. Risks that you need to be mindful of: any weakness in demand, of course, which could impact the revenue profile, and the rise in raw material prices, which could significantly impact the operational performance or the financial performance of the company. With this, it's a wrap. Thank you so much for tuning in.